Hello and welcome to Gemini Traders Update, your trusted source for deep market analysis and actionable trading insights. I'm Zain, and today we are breaking down the February 2025 Macroeconomics and Investment Strategy Report, explaining our predictions and offering focused recommendations for navigating today's market challenges. Now, our market predictions are built on a solid foundation for quantitative risk models, including proprietary Monte Carlo simulations and qualitative insights from respected sources such as Barron's, the Economist, and Sunday Times. For instance, our forecast of persistent inflation at 3% with sticky shelter costs is supported by simulation data showing a 65.2% probability that inflation could exceed 3.5%. These predictions are inherently uncertain due to geopolitical events and support chain disruptions. So we encourage you to review the detailed methodology and risk disclosures available in our show notes. For those interested in understanding Monte Carlo simulations better, we have provided educational lines in our show notes, and you will find in the descriptions. Now let's dive deeper into market dynamics, global economic pressure, ranging from rising shelter costs and supply chain issues to aggressive trade policies. These are all prompting investors to rethink their strategies. For example, US tariffs on steel and aluminum are sparking retaliatory measures by the EU, potentially pushing industrial costs up by more than 0.6% on the CPI. These signals not just short-term inflation but longer-term shifts in consumer spending and industrial production, making defensive assets like consumer staples and bond increasingly attractive. Understanding these underlying factors help explain why our portfolio recommendations leans toward assets with stable fundamentals. Now, let's just talk about specific rationale for our trading recommendations. Now, based on our analysis, here are our focused trading recommendations along with a detailed rationale. Now, for gold, we are recommending a long position with an entry around 2,908.85, and we will be targeting the 3,050 level, and this is the psychological level, with the stop loss at 2850. Now, gold traditionally acts as a hedge against inflation and market volatility. The stop loss here is crucial. It is designed to limit potential loss and protect your capital if market conditions change unexpectedly. Now, with AI stocks, let's just talk about some focused recommendations because rather than broadly shorting the entire AI sector, we recommend focusing on Nvidia. And as our primary candidate for shorting, Nvidia's valuation appears overextended when compared to its earnings growth with our analysis, suggesting that speculative excess could lead to a correction of over 15%. Now, we believe that this focused approach allows for a more precise risk-reward assessment compared to spreading recommendation too thinly across multiple names. And everyone's favorite, cryptocurrencies. Quantifying over-leveraged altcoins. In the crypto market, we observe that certain altcoins exhibit high leverage ratios exceeding 4x and have lower market capitalizations, typically under $1 billion. These characteristics indicate that they may be more vulnerable to market downturns, rug pulls, and you know the rest. Our recommendation is to cautiously long Bitcoin while shorting these specific over-leveraged altcoins. We advise investors to look for altcoins meeting these criteria when considering exposure to the crypto market. Each recommendation is supported by detailed quantitative analysis and is discussed further in our show notes, where you'll find links to the risk disclosures and methodology breakdowns. Now, let me just take a quick moment and talk about some key jargons and concepts since this is our first podcast. So before we continue, let us clarify some industry terms. Monte Carlo simulations. This is a statistical method that uses random sampling to model the probability of different outcomes. It helps us simulate market scenarios. And stop loss is in order to automatically sell a security when it reaches to a specific price. This is to maintain your losses. This is what you call about handling your risk management. This is key for limiting losses and protecting your capital. Hedge is it is an investment taken to offset potential loss in another asset. And leverage ratio, it's a measure of a company's debt relative to its asset or equity. High leverage in all coins indicates a higher risk during market downturns. We have populated our show notes with detailed definition and educational resources for these and other key concepts. Now, let's take a nuanced look at cryptocurrencies. Let's turn to cryptocurrency market. Bitcoin recently surpassed 100K mark, 100K dollars mark, driven largely by retail investors' enthusiasm. However, institutional investors remain cautious due to liquidity and leverage concerns. Specifically, some altcoins show leverage ratios greater than 4x and market caps below $1 billion. And this factor that make them especially risky. This detailed perspective reinforces why we advise a cautious long position on Bitcoin while recommending short positions on these over leveraged altcoins. We have included further analysis and criteria for identifying these coins in our show notes for you to take a deeper look. Now, there is something really important we would like to talk about. It is about the importance of risk disclosure. Before we wrap up, it's essential to acknowledge the inherent risk involving in trading and investing. Our analysis is based on current market data and advanced models. But remember, past performance is not indicative of future results. All investments carry the risk of loss. Please review the comprehensive disclosure in our show notes to better understand these potential risks. And now, in conclusion, the current market environment, characterized by inflationary pressure, shifting trade policies, and evolving tech and crypto dynamics, requires a balanced data-driven approach. Our focused recommendations aims to navigate these complexities while managing risks to define stop losses and diversify asset allocation. Thank you for joining us on this detailed market analysis. We invite you to review our show notes for further insights, education resources, and detailed risk disclosures. And as always, we encourage responsible investing and recommend that you conduct your own research before making any trading decision. This is Zane with Gemini Traders Update, committed to providing informed, precise analysis for responsible investing. Stay informed, stay cautious, and happy trading. See you later. Bye now.